is Sky News Real Estate. Smart investing.
Hello and welcome to Smart Investing. I'm Chris Gray. On tonight's show, how do capital city auction results vary over different suburbs, and what does that tell us about the market? What are the advantages of buying off the plan properties, and is now the right time to be buying one? And how can you use your equity smarter? Well, joining us tonight is Rob Southwell, Managing Partner of Pitcher Partners Accountants and Advisors, and Charles Tarbey, Chairman and Owner of Century 21 Australasia. Good to see you as always, guys.
Hi, Chris.
Now, we know Charles normally goes through the auction results, but we're going to try and break some of them down into finer things so people can start reading, I guess, more into those auction results. But we'll pull up a graphic to start with. Do you want to take us through what's happening now versus next year?
Sure.
Or last year, rather.
Sure. So I thought the first graph was really just comparing each capital city. These are based on auction clearance rate, I think, for the week before last, but comparing to the same week last year. What you're seeing is quite a big drop in just the clearance rates. So you're looking at probably a national average of sort of 73% down to almost 60% as of a couple of weeks ago. So, and the interesting stat with that, you're also seeing the total number of properties up for auction is also reduced quite a bit as well, from sort of 2,800 down to 2,000. So it's showing that there is a clear softening in that area, and there's also people are a lot less willing to go to auction at the moment. So.
Yeah, and we'll pull up the next graphic as well, because that really then breaks down, because we always say, Charles, don't we, that the auction results say 70%, but that could mean some's going up at 80 or 90, some's down at 40 or 50.
Yeah, certainly there's always an expectation that closer to the city the suburbs are, the better the clearance rate should be.
Yeah, so on the screen now then we've got places from, say, the Central Coast.
Yeah, so if you look at, breaking Sydney down into sub-region auction results, you know, you've got some sort of the higher clearance rates like the eastern suburbs there at 72% versus I guess some of the lower areas. I think on the next page you've got places like Parramatta and you know, down at half that rate. So it's clear to see that there's certain areas that still have quite a lot of demand attached to that. So if you're looking at where you should be investing, obviously there is still quite a bit of pent-up demand for the city and inner south, the inner west, the eastern suburbs, and probably the lower North Shore. And again,
seeing Sutherland there, is that 15%?
Yeah, I mean, you're obviously coming off there's probably a lot less houses up for auction in Sutherland. But again, you know, having you know, 1 in 7 properties sell going to auction doesn't inspire a lot of confidence. Yeah. When you compare it to, say, the eastern suburbs at 72%.
So Charles, obviously this is going to happen all around the country and all the states that you talk about your stats. So I guess from your perspective is, what should people be reading into these stats, and I guess where can they maybe get some of the finer detail to make the best advantage of it?
Well, some areas are not suitable for auction, and we can argue with auctioneers about that, but realistically, when there's 10 or 15 or 20 properties for sale in the same suburb, people are not going to extend themselves. They're not going to go out and get their pest reports, building reports, finance approvals, all those things, to turn up at auction and miss out. When the stock levels are really low in certain areas, that's when you have that expectation. This is why auctions are further and further you get out from capital cities, least likely they are to work. It's not the auction system doesn't work, it's just that there's so much competition out there that's not going to auction. And so I think that's people really need to watch that. So if you're reading into it, if you're in the inner west of Sydney, you're going to have to compete. That's telling you that you're going to be there, and you're going to be there with your checkbook ready to sign up on the day.
Yeah, because it's very hard. I mean, we're finding it with a lot of our clients at the moment is they read all the reports in the press, they see the clearance rates coming down, they think they can negotiate harder, they think they can hang around longer, and the property market's going down. Whereas in a lot of these suburbs, it can be the complete opposite. It's actually rising. Sure, there's no stock, but you've still got to battle to try and find that property.
Yeah, absolutely.
So, OK.
Were you expecting an answer then? So well, we left you hanging out there.
Bit of a comment, but
sorry, who's the host?
Yeah,
who's the host?
Anyway. I thought something might come back, but never mind. OK, well, let's move on to banking. We'll go through the latest results later on. Rob, what's the latest from your perspective with the Banking Commission?
I think you're seeing a bit of want to do something. We're getting a lot of feedback, particularly through our brokers at the moment, that just because you have a pre-approval in place doesn't guarantee that the loan will actually get written. We're seeing examples now where probably clients that look very good on paper, have good serviceability, reasonable equity, have pre-approval, and then once they've actually going, they might be a delay, they found the property, then they're going to buy the property. The banks are coming back either requesting more information or coming back with a lower lending amount. So I think for people out there, you've got to be really, really cautious. You've probably got to move very quickly. My advice is, particularly working with your broker, if you know what you're ready to buy, is to get the loan and the loan documents done as quickly as possible, because the longer you leave that between your pre-approval and actually getting that signed piece of paper from the credit department, the more assured you'll be. So I guess there is a sense of nervousness within the various departments of the banks. Every bank is different. They're writing different policies. They're coming at it from different angles. So, and they've all got, I guess, profiles around what they're after and what they don't want more of from a borrower perspective.
What has really changed, apart from the fact that the Royal Commission is there? What has really changed? Has the economy changed? Has it gone backwards? Are we missing something?
Yeah, but I think the main thing that they're bringing in now is increasing people's expenses, or their estimate for expenses, so reducing their serviceability even more. So where there's a lot of people sitting on the fence, so some people are thinking, well, the market's still moving up. There's other people thinking there's going to be more blood on the streets. But you could get a mortgage today, but we've had APRA in the last year, we've now had the Banking Commission, which are all changing the serviceability. There's a chance that, sure, you can wait for a bargain for another 6 months, but is there a chance that you won't even get pre-approval in 6 months' time?
What are they telling us? What are the banks trying to tell everybody right now? Are they
calm down, slow down, take the heat out of the market?
Slow down. The market's in real trouble. You better get the money while you can, because we're not going to give it to you in 6 months' time. That's what it feels like. If you talk to the agents out in the marketplace, they'll tell you that they're losing sales because of banks right now. Nothing more. It's purely banks and banks' concerns or their
anxieties. Their anxieties.
Yes. Yeah. I think that's a really strange thing, because the economy is not in trouble.
No.
But I mean, John Mansamelli, who comes on here quite a bit, again, we were talking a few weeks ago, is APRA seemed to be around to try and take the heat out of the market, so there was no bubble. Yeah. That almost definitely seems to have happened now. Like, no one's talking about a bubble.
He was very
vocal as well. Yeah.
And APRA's relaxed that rule now on their interest-only caps, and
so
they've actually chilled. They've chilled now.
But now the Banking Commission is like, come in for a second, kind of stab in the back while you're already down.
Yeah, and so I guess it's a unknown time for investors. So you have to actually make sure that you've got to be very, very prudent, very diligent in not just getting your loan applications and you're dotting your I's and crossing your T's, but you've actually got to move quite quickly to make sure you get it while it's there.
And is that the major things that people should be concentrating on, just getting that pre-approval?
I think the most important thing now, what we're seeing, is it's not so much the pre-approval, it's that gap between the pre-approval and actually getting the loan documented and signed away, because what we're seeing is that's where the banks are getting nervous. So going through the credit areas, they're coming back with want for more information, or they're changing their policies. So if you are, I think it's a really interesting time to be out there buying. But if you do it diligently and you're on top of it, it is actually it's doable. But you just got to be really.
So keep checking with the bank, keep checking with the broker to make sure your pre-approval is still actually a pre-approval.
Absolutely.
There's one thing for certain right now, and that is that equity doesn't qualify you anymore.
Yeah. No, absolutely.
That's for sure. And a lot of people really need to get an understanding of that. You're not going to get a loan just because you have a good amount. And a 50% LVR doesn't guarantee you a loan.
No, exactly. And I think that's where all the focus is going.
Good old days are...
They're gone. Good old days of 110% financing.
We'll try and change things. We'll find a new app or something like that. Let's jump into the auction clearance rates, Charles.
Yes, well, as Rob has been saying, they've been dropping. They've been dropping every week now for quite some time. The clearance rate for the entire week was 59.7%. It hasn't been under 60 for a very long time. So now it's starting to get back there. 71.3% was what it was this time last year. So it's an interesting comparison between the two. So there seems to be 10 plus points between the two periods of time with auction results. And Sydney was okay. Sydney got a clearance rate of 62.7%, and they had 808 auctions, so it wasn't too bad. Melbourne actually was not the star performer. Usually it beats Sydney, but Melbourne had a clearance rate of 60.9% with 1,132 auctions, but the capital city that did the best this week was Adelaide. It actually was in 66% range, so higher than all capital cities, but more importantly, it was higher than this time last year, and that was the only capital city that was higher in clearance rate than this time last year. So that's been a pick for a while, Adelaide. It's been a nice, stable marketplace, so I think people should start having a close look at Adelaide.
Now, looking at the chart, there is a pretty big downward trend, and it's been happening for a while. What are the factors that will then start taking it up? And I know it's maybe too early to call it, because the chances are it might carry on for another 6, 12, 18 months or so.
Well, I got an email from my PR guy today. He said, I just wish the RBA would do something with interest rates, because I'm sick and tired of sending you the same press release for you to approve every month. You know, I think that there's no chance that I can see that there might be a rate drop. That could spark it. I could be wrong, but they certainly haven't given us any indication of an increase. I think the stock level's tightening up, and we can talk about that in a second, might be an indication. But it's going to be the way it is, I think, now for some time to come, particularly with the Royal Commission and the focus on banking, because I've never seen it like this in a long time. During the GFC, there was talk of banks calling up loans, and a few of them did. And I can tell you right now, there are banks out there going to clients right now saying, we think you should be looking for an alternate lender. So that is happening right now. So something's going on.
Well, let's turn on to something more positive. What's about homes advertised for sale? Anything positive in that?
No, negative. No, it's not a big deal, but it's a negative 0.24%. There's still 4.72% more stock on the market than this time last year. So still plenty of choice. Still not as much money. Still a lot fewer buyers. So people can muck around a bit and make a few offers here and there.
And how are things going with the rents?
Not much has changed there. There was a talk, it's still minus 2.23%, 0.23%. But what was a discussion point last week, Chris, was how different it is in some capital cities, particularly Perth and Darwin. They've been negative territory since we started looking at these charts for some time. Adelaide was the highest performer, and still is, but it's starting to come back. And I think that's going to be an interesting marketplace to watch as the properties come up off the plan that are being sold, the new homes and the apartments, and people start trying to find tenants. Perth went through that really, really badly. I know landlords that were giving up to 3 months rent-free periods just to get tenants in. They'd factored 481, landlord had factored 480 a week in his mortgage, now giving away 350 a week.
Yeah, pretty tough times. And finally, the vacancy rate. Yeah,
the vacancy rate's very, very strong in Melbourne, 0.44%. So it's been the best performing capital city for quite some time. Sydney actually rose. Sydney rose to 3.19%, so Sydney hasn't been that high in a very long time. So something's going on there. Maybe the influx of those apartments settling. I know there's a lot of apartments settled in my company over the last few months, so that's certainly happening. And Perth at 9.62, really climbing back up there again. So that's an average of 4.42% to 4.416. If we want to be accurate, 6.6 for those three capital cities.
Wonderful. Thanks for joining us as always, Charles.
Pleasure.
Now, we're going to take a short break, but we'll be back soon.
You're watching Sky News Real Estate. Smart investing.